Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fieros with Tri-City Equity Group. Today, we've got DJ McClure on the show. DJ is the Director of Sales and Business Development at National Flood Experts. DJ works with real estate investors nationwide to provide niche solutions to add property value, increase NOI, or remove lender-mandated flood insurance for their flood zone assets. I'm actually pretty excited to talk to DJ because we were just facing this with an acquisition that we had this year. So I'm going to be hitting him up for sure in terms of taking a look at a property. But yeah, he works with various commercial real estate markets, including multifamily. So the stuff that we do, but definitely make sure to hit him up to see what kind of unique cost saving solutions that they can do and help you guys out with your portfolio. To date, he's helped clients save well over $5 million and added over $100 million in property value. DJ, welcome to the show.
Excited to be here. Thank you very much.
Yeah, no, thanks for hopping on with me and taking some time. I know we can work together to bring some great value for all of our listeners, both intrinsic and real value. So definitely excited to have you on. I know a lot of real estate investors are struggling with insurance costs, and we were seeing that across the board with massive increases. But kind of before we dive into a little bit of the nuts and bolts of kind of where we are in the market and how your company can help out our investors, give us a little bit of your backstory. How did you get started in real estate? Were you always in insurance? And did you have a bad experience with a flood as a kid or something? And that just drove you to help out other people? Or what's your story?
Yeah, kind of a mixed background in reality. I'm not an engineer. I'm not an insurance broker, right? I just like solving problems. And my background, in fact, was that of a tennis pro for most of my 20s. And so the problem I was solving was people's forehands and backhands. And that's a pretty fun puzzle. And as I was finding my way career-wise into some other industries, my wife and I ended up in Tampa, and I came across this company, and I was just very fascinated just immediately by the overlap of industries that they were working within, that being engineering. I had worked for a past mechanical engineering company in sales. And so I kind of understood how, a lot of solutions live in the details. And so this having the engineering component overlapping with insurance and overlapping with real estate, this triangle of knowledge bases really overlapping to solve this overwhelming problem of properties in flood zones and high expenses. And so it's been 5 years now and plus some. And the years pass quickly when you're helping investors add tons of value.
Oh, for sure. Yeah. I mean, and absolutely. Like, how important would you say that this is, let's say, for today's investor, right? How does that factor in what you guys do? What have you seen I like that you've had experience, let's say, over this last 5 years, because you've been able to see a change, right? And anybody who's been in the business for any extended period of time, we all know the market does kind of cyclical in nature, but the last 5 years have been particularly unique because of the amount of change that's happened in a very short period of time. How has it looked from when you started, let's say 5 years ago, to where we are right now?
It's super interesting because the evolution of cap rates just over this 5-year period, it's been so visibly impactful across all the different asset classes that we work within. And so for us, we're creating immediate NOI for these properties. And to see the evolution of the cap rates and how these really have affected valuations, how these dollar savings can be impactful for refinances that we had 2 and 3 years ago, because we work with properties in the entire life cycle. So that's where the real estate side of our knowledge base comes in, because we want to really understand what is the current situation that you're in. And there's unique problems that exist. Well, if you're in the acquisition due diligence phase, there's other problems and scenarios that exist going into a refi and similarly into a sale. So we want to understand what you're going through. We want to get in and figure out what different solutions exist to create that NOI for the property. And then what are the problems we can solve all in the same action.
Yeah, absolutely. That's actually going to lead me to a good question here is, when does this need to be done, right? I know you mentioned like, okay, we can work with investors or owners kind of throughout the life cycle. Like, is there an ideal time to do it? Does it matter? Say, hey, I bought a property 3 years ago. Is this something that we could still take a look at? Or like, I've had this thing for 15 years. Can you help me out? Is there something I can do? Or who is this an ideal fit for?
Steve, how's the expression go? The best time to buy real estate was yesterday. I would say the same for us, right? The best time to look at your flood zone, your flood policy was yesterday. We meet a lot of investors that will have been with a property for a number of years, paying year over year that expense. And then we find a solution and they always say, I wish I'd met you when I bought this.
Mm,
To answer your question, as early in the process as possible. We deal with investors when they're in early acquisition, just underwriting deals, trying to get numbers to work. And when you get into due diligence, obviously you have more access to information from the seller. So as soon as you get under contract, give us a call because we're going to get the flood insurance docs from the seller. We're going to get elevation topography information from the seller. And in a lot of cases, we can qualify a project and then be working on that behind the scenes while you are finalizing the lending. And then in some cases can go to closing and already have FEMA's approval to where there's no flood insurance requirement at closing, or we found a way to reduce the flood insurance policy that the seller had, and that then transfers to you as a buyer. This is all bonus NOI that's not figured into the underwriting.
Yeah, I was going to say for our listeners that may not be fully familiar with kind of how that works. Obviously, residential valuation is just based off of comparable sales. The insurance cost going to factor into like your operation? Yes, it will. But on the commercial level, it can make a massive difference because what we're really trying to solve for is like how to boost our NOI the best possible way, right? So once you add on a flood insurance policy, like let's say it's lender mandated. I mean, we're not talking about $1,000, guys. Like this could be like a huge number. And so that can dramatically boost your NOI, especially like to DJ's point here. Like if they're able to remove, let's say, that requirement or reduce the amount of the policy, that's a huge, huge number. And talk about finding money in the couch, man. I mean, it's way more than that, but that can make a huge difference on your underwriting because now you can help to allocate those resources maybe somewhere else. That can make the deal that much sweeter. And we just haven't been seeing that. I feel like the last few deals, even underwriting conservatively, like our team has had a real challenge going into, okay, hey, we're going to close and we've got these upfront costs, but knowing that we're trying to underwrite for certain amounts for insurance specifically, only to have like, let's say the lender push back and say, no, we need this, we need a higher amount because there's been so many issues that have come up specifically with, let's say, flooding. And obviously this affects certain areas more so than others, but in any market, you can find areas that are, let's say, more prone to flooding and whatnot, and this can directly affect you. So that's massive. So I want you guys to be fully aware of that. Like that, if you can do that, if you can do this before, like let's say close, boy, that can be huge. Now I will ask DJ, like, how long does this process usually take? I mean, and that may vary. I don't know, but do you typically see like, okay, hey, we have a certain timeline that we can work with? How long does the evaluation process usually take to look at a property?
Yeah, that's a good question. And if you don't mind, Steve, let me back up for 1 second.
Yeah.
Just a quick education piece. So it's important to understand that the flood zones, there's various types, right?
Mm-hmm.
And so some people listening might be thinking, well, how do I know if I'm going to be required for flood insurance from my lender? And the way this works is that any 100-year flood zone around the country is going to then cause the lender to have to pass on this compliance requirement for flood insurance. And depending on the type of loan program that you're using, that will determine the levels of flood insurance that the lender has to show proof of coverage. And so that's kind of the basis of a lot of things, right? So most people are buying flood insurance because they have to. Mm-hmm. So as we're looking at the problem and saying, all right, what are some different ways we can help here? You're looking at a couple different ways. Can we help reduce the policy cost, or can we help get the flood zone changed to where they're no longer in the 100-year flood zone? Now that process, to answer your first question, it can be anywhere from, let's say, 4 to 8 weeks. It can be as fast as 1 to 2 weeks. Actually just had a project pop up out of nowhere a week and a half ago. And this particular client had a policy renewing at the end of the month, right? So we're like December 7th or 8th. He's renewing on December 28th. And our team was able to review it, qualify, get it to FEMA. We had it back inside of a week. He's already got his lender to remove the mandate, and they are 10,000 cash flow positive starting in 2024. So
yeah, listen to that number, guys. Like I'm telling you, and it's, I can 100% attest to this. Like he's not lying. I don't even know that situation. I don't even need to know, like, let's say this client specific, this owner, this investor's specific project to know that that could be absolutely true. Like that the numbers here are not, like I said, they're not insignificant. So, and that makes a huge difference on, let's say, your valuation, because now instead of having to pay that $10,000 premium or whatever the cost was going to be for, let's say, the flood insurance, he can drive that back towards his profitability, which makes a massive difference, let's say for commercial property, on the value of the property. Like how many units would you have to rent out to make an additional 10 grand, let's say?
Yeah, you're talking hundreds of thousands in value immediately. And this is a short-term hold. So this investor knows they're only going to have this property for a few more years and then release it to the market. So these things transfer to a buyer automatically. And it's going to totally open up the buyer pool of potential buyers that may now consider the property because it doesn't have a flood insurance requirement.
Yeah, for sure. And do you see this too? I've lived in cities where they were much more flood prone or just had a lot of lower lying areas. Do you see this? Are you finding that you guys' services have been really popular in specific markets and specific states? Obviously, again, topography is going to vary location to location. You can be in a higher elevation city or market and still have low lying areas. So guys, I don't want you to think that, okay, hey, that you can't find relevance to this type of product or this type of service, rather, wherever you're at. Do you see you guys doing a lot of work in specific areas, specific markets?
Well, we've done projects just in the last 12 months in 46 states to give you an idea that this is really everywhere. And to give you some just base statistics, so we look at thousands and thousands of properties, and we'll look at, in a given year, we'll look at 10,000 plus buildings around the country. And we find a solution on roughly 50% of the ones that we see. And we monitor that statistic really closely, and it's not in any one area, though there are saturations because areas like Houston, the New Orleans, greater Louisiana areas, naturally they have larger saturations of flood zones. So we will find large clusters of projects successfully, but it's not just one solution. You may find clusters of flood zone removal type scenarios within a market. You may find other situations with making the policy costs less, and that when you improve the rating of the policy, that creates a year-over-year impact. And so if you can take someone's policy from, let's say, 10,000 to 5,000, that they're starting at 5,000 that next year, plus probably a small increase. So that's a common question, Steve, that we get pretty often. And I think sneakily people are trying to say, hey, where are the deals? But the deals are everywhere. There's hidden NOI and flood zones all over the country.
Well, this is an awesome tool. You kind of use it analogy frequently of like, okay, hey, you want to have a tool belt, right? And your tool belt can hold multiple tools in it, because the more tools that you have in it, the more solutions, basically the more problems that you can solve. So what an excellent tool to have in your tool belt, because, hey, where are the deals? Well, a lot of times you're making the deal, right? So if you have a property like this or something that's, let's say, in a flood zone, and that's going to scare a lot of investors off. Right? Or maybe they've already done some preliminary research on that. Say, hey, I don't want to invest in that. Especially like, let's say in Houston. I lived and worked in Houston for about 5 years. I got caught in flash floods before. I've had my vehicle flooded out. Like, it's pretty crazy. There's just a lot of low lying areas, let's say, in markets like that, right? Just to your point earlier. So you're going to find a lot of investors that are just scared off of a market like that. It's like, okay, well, hey, look, what if we can create a deal there by bringing in some solutions to help kind of mitigate some of these increased costs that, hey, well, yeah, I've heard you can't get insurance there. Okay, well, I'm not even going to look in that market. Well, okay, well, how about you take a second look? With somebody, have a conversation with DJ and see, okay, is there something we can do here, right? To help kind of potentially create something that you thought wasn't possible, right? So I think in this kind of where we are in the market cycle right now, you have to make the deal. Right? You have to bring the value. You have to find solutions for the problems. The deals are not just low hanging fruit anymore when the money was cheap. Okay, now we got to hunt them out. Now we got to create some additional value, create some additional solutions here. So I love that approach. I really, really do.
Yeah, and review process that our team does, like we're not charging anything up front. We do a lot of desktop reviews. We're looking at several hundred properties a month. And that's volunteered time in a way, because we know statistically that there are solutions that we will find. So I challenge everyone listening, if they have a property in a flood zone, to take advantage of that resource. And like you were saying, like it can be new deals, existing deals, everything in between.
Yeah, it's like I said, it's definitely exciting to be able to know, okay, hey, I can go back even into my portfolio, any existing acquisitions, and let's go revisit some of this. If you've got a flood insurance policy already on your property, hey, is there something that we can do here And I mentioned to DJ, I've got a property here for sure. I'm going to be hitting up about, because there's definitely, we need to find some solutions in terms of getting some removals done, if possible, right? And there's no guarantee, but I like you're saying, hey, my strike rate is 50% there. That we're going to take a look at a lot of properties here. There's a high chance that we can find some kind of a solution to bring some additional value, if not a removal, maybe a reduction, right? And all of that helps.
That's right.
Right. So yeah, I love that. I love that. I know you mentioned this, the real recent one. Have there been any other like interesting cases that you guys have taken on? I mean, you've been in business for 5 years. Any other like transactions anywhere along the way kind of stand out to you?
Oh, there's tons of stories. I mean, there's the unicorn cases where we had a client in New Orleans. He had 100,000 plus annual flood premium. We made that go away. And he came to us. He knew he had a refinance coming later that summer. So this was an early summer project. We got this done. I mean, you can do the quick math. And we're talking millions that this added to his cash out refinance. We've had companies where we went through their entire portfolio and found hundreds of thousands in cost savings. These are cases that are somewhat more extreme, right? We probably in an average case, you're finding maybe 10, 20,000 that they're spending. And so these are the kinds of savings that you're finding. But there's some really extreme scenarios out there, largely that are Fannie and Freddie type loan programs, because the requirements that they pass on are full replacement value. They want 12 months of business income specifically for the flood. So that case I'm describing in New Orleans, like that's essentially what types of scenarios you see where they get into that level of dollar amount because they're having to go out and get 10, 20 million worth of flood insurance, and they have to go to the private market. And that's where it gets very costly. So even those agency loan type programs, they follow the same protocol. So if you can make that go away, you can still maintain a level of flood insurance. I see a lot of our clients don't necessarily cancel their flood, but in getting the lender requirement removed, it creates a whole domino effect of various benefits and value.
Yeah, sure. I mean, you'd always rather be in that position of, okay, well, hey, I'm in control at this point. So versus, no, the lender you need that additional 12 months impounded for reserves. You need X amount of coverage. It's like, well, look, I'm not saying I'm not going to forecast and take care of my people, take care of my property. But again, when you force me to do it, boy, that puts a big strain on working capital. It puts a big strain on like, hey, I want to go be able to try and take down another property or go do another acquisition. And sometimes if you're tying up that large amount of capital, that makes it that much more difficult to do. So even something as simple as, hey, look, let's have a conversation. Let's put together a package. Let's give the lender what they need to see in order for this to go away or lessen the requirement or whatever. And now you're more working on your terms versus what the lender says. Hey, look, this is what you need to do. So no, it's a very, very powerful strategy. Now, for those of our listeners that may be thinking, okay, well, hey, I do want to have a conversation with you, DJ. I'm going to reach out. What do they need to have in hand for you guys? Like what's relevant? Like, what do they need to start kind of working on to bring to you to say, all right, hey, can you help me out here? This is what I need to, I want you to take a look at my property.
Yeah, it's probably a lot simpler than people are imagining. We want to take a look at the flood insurance declarations pages of the property because it's a two-part review. We're looking at the flood policy for opportunity. FEMA just changed their rating system within the last 2 years. So there's a lot of different discrepancies that we're finding in this new system that we can help correct and improve to the client's benefit. So the declarations pages of the flood policy are the first. We ask for elevation certificate or topography information for the buildings. That's not always available. Sometimes those don't transfer from seller to buyer. So we do have a field team in-house that we can dispatch to get on site. That's the only time our clients ever see an upfront cost, but we're super objective about the field work. So our team will actually assess the property up front and give an objective opinion if we think that the field work actually has a chance of success. And if it doesn't, we'll still tell you, look, this is probably a 10% chance, but do you want to explore further? So this way, everyone's on the same playing field here as to what the goal is and what the objective outcome could be. I will say, for 2023, 70% of our field work has been successful in what they expected the solution to be. So pretty powerful batting average there, we're proud to say. And then a site map, right? We just want to be able to ID the building numbers, especially if it's like a multi-building type site. It's those three documents, and our team will do the desktop review. It usually takes a few days, get you back what we think the next steps will be. And then at that point, in some cases, we have all the data. We can move straight to an actionable phase, especially if that's what the timeline requires.
Yeah. And would you even recommend this for somebody who's like, my current property is not in a flood zone, or at least I don't have flood insurance at this moment because the lender didn't require it. But you're saying, hey, they have changed some of the maps here. Maybe there's a potential. I know, okay, hey, I'm close to a body of water. Could that have affected me? Let's say I'm trying to gear up for a sale or gear up for a refinance or something along those lines. Would it be a good idea to still reach out and say, like, hey, can you take a look at my property? I'm genuinely curious. Is this going to be something we're going to run into? Because that would be my thought, was like, all right, like, can we head off potential issues,
Yeah, not all of our clients have flood policies.
Mhm.
There are properties that don't have debt from time to
Mhm.
time. And there's two qualifiers really for us. The one is the one we've been talking about, where if you have a lender requiring flood insurance,
Mhm.
you should 100% have our team take a look. Secondly, if you're in a 100-year flood zone or you're looking to buy something in a 100-year flood zone, kind of similar, right? As well, get some high level information, at least understand what you're looking at and what the potential could be. We work with a lot of acquisition teams, and we will say, look, there's 7 buildings out of the 20 on this property that are in the 100-year that a lender will require. Make sure you figure that into your underwriting, regardless of what the seller is saying, because the seller situation is not going to always be the buyers, as you know. That's really what I would say. If someone's not in a 100-year flood zone, if their property is in an X zone, realistically, there's not going to be much for us to do, but they're still welcome to reach out if they have any questions about anything as well.
How can they find that out too? Like if hey, I don't know if I'm in X, I don't know if I'm in AE or if I'm in flood or whatever. Like, is there where can I go as a resource, like to even just kind of look that up?
Yeah, I mean, you can Google FEMA's flood layer. It's a public site. I can even share with you. We can put it on the posting here when the show releases. It's pretty simple, actually. The blue on the map is the 100-year. So if any of that blue area touches even a small corner of any structure, it's going to get flagged as being part of the 100-year. Unfortunately, even if that 1% of the building is overlapping, they consider 100% of the building for the lender requirement. So they're more conservative than not. But that's what I would do, right? If you look up your current property, look up something you're thinking about buying. And even if you're just checking that box off in your acquisition checklist, that's one less thing that can surprise you a couple weeks before closing. I can't tell you how many times, Steve, we've had people call us 2 weeks before closing. The lender was confirming their flood zone determinations for the property, and a few buildings got flagged to their surprise. They're saying, we need proof of flood insurance. And they're saying, please help.
Yep, 100%. And that's the nice thing is that there is public resources available. And so for those of you guys that are not, like, maybe you haven't had a project, I've invested a ton and I haven't had to run into this. That's very possible. You should always kind of make that a part of your underwriting process or just your due diligence process, right? Like, hey, what is this thing in a flood zone? Like, I don't know. The seller may not know. The seller, I have never had an issue with flooding. Okay, well, if it's a 100-year floodplain, again, the idea there is that every 100 years, the property has a chance to have flood, right? So we just may not have experienced that at this point, but this should be part of the due diligence that you're doing on any property, residential, commercial, industrial, whatever. Especially because now, like I said, that the insurance costs have gone up so substantially. We really want to try and find any kind of cost savings that we can. And this is an easy way to do it, right? So yeah, no, I think your service is incredibly, incredibly valuable. Well, this is kind of the point in our show where we transition a little bit just to what we call our fire rounds, just a little bit more rapid fire questions, just a little light, quick and easy. Is that something you're up for?
Let's go.
All right. What is your best book recommendation other than, well, for our real estate people, right? It's Rich Dad, Poor Dad. It's the Purple Bible, but any good book recommendations that you have? Maybe tennis related. I don't know.
Well, I encourage everyone to play tennis, but maybe I'm a little biased. But I really like Executive Ownership. That's a very strong book, military-based logic in the business world, if you've never listened to that book.
Executive Ownership. All right. Yeah. No, I haven't heard that. I have not heard that as a recommendation. So yeah, I'll have to check that out. All right. Next question. What would you consider your superpower besides a crushing backhand?
Connecting people. I've always loved connecting people and being able to bring resources to one another and just be a contributing member of society.
Yeah. I mean, I feel like that fits where you are, right? You're connecting multiple people to bring a ton of value. So no, I think that's a great superpower. Next question. What is the biggest lesson that you've learned over your career thus far?
Gosh, you've got to you got to fall a couple times before you can really make any progress. There's so many scenarios that's applied to me over the years, both in life and in business. And it's you trip, you just keep getting back up, and eventually you start to trip less.
Yeah. And I think that's super powerful advice. We've heard that time and time again from guests on the show. It's like, hey, you can't be afraid to fail. And that's a hard thing to do because that's admitting for the individual to say, like, I'm not good at this, right? Or at least not the first time, and nobody is. But don't be afraid to go out and try. You'll never know what you are good at, right? Or you'll never fail enough times to learn. Okay, well, hey, I need to put in some more practice there. I enjoyed it, but I didn't work out for me the first time. Let's try it again, So
I think that's
great.
that's the lessons from tennis, right? Tennis is just a game of mistakes. You're constantly ending a point. It's the guy who just fails a little bit less than the other guy that wins.
Mm. No,
So,
like
like I said, tennis is very applicable to life.
Yeah, that's great. Next question. For the busy working professional who's trying to work towards financial freedom, what advice would you have for them?
Well, I'd say start looking at deals regularly, regardless if you're trying to get in on the GP or the LP side. I've gotten in some deals on the LP side over the years, and I know more now than I did 3 years ago. And there's questions I ask now that I didn't ask 3 years ago that I wish I would have, as everyone would probably agree with. But you have to look at a lot of deals to figure out what your criteria is, what you really are looking for, figure out what you're comfortable with. And that's the only way you're going to build a network also. If you're only looking at deals from one source, you might miss out on different types of language or different structures. So yeah, that would be my advice.
Well, very good advice. Very, very good advice. And DJ, if our audience or listeners, they want to reach out, they want to get in touch with you, whether that be to have you take a look at their property, or they just want to connect with you a little bit more about pick your brain, what's the best places to go to send them?
Encourage anyone to connect with me on LinkedIn. Very active on LinkedIn, or try to be. They can reach out at info@nationalfloodexperts.com. And that's, if you've got any property you'd like us to take a look at, that's a great email to use, because you'll have someone from our team follow up immediately. And I see those emails come through as well. So happy to schedule conversations as well. And then third is, there's a tremendous amount of information and education we've put on our website this last year. Lots of case studies straight from our clients, so they can hear different scenarios and different impacts. So yeah, I look forward to engaging and helping anyone in the listener base that we can.
Awesome. Sounds good. Well, DJ, it's been a pleasure having you on the show. Very relevant topic, I feel like, for today, and really helping out our listeners to really get as much value and maybe find some value that they didn't know was there. So I really appreciate you coming on and kind of sharing your knowledge, your experience with us. And yeah, have an awesome day. I really appreciate you. Thank you.
Thank you.
Great having DJ McClure on the show talking about flood insurance. What a powerful tool. He's over with National Flood Experts. Awesome tool to be able to potentially relieve yourself and your operations of having to have flood insurance on a property. He said that they've had great success removing, let's say, those requirements, or reducing the amount of flood coverage, let's say, that a lender might require or put debt on a property. It's can be a huge card to be able to pull, especially if your deal's getting tight. Or, I mean, for one, everybody's going to want to save money, but on the commercial side, again, you're boosting valuation because you're removing that expense, and everything is driving back down towards the bottom line. So that can make a huge difference on your valuation. So if you're trying to gear up for a refinance, you want to just have lower your operating expenses, and that could help you also with a potential sale. Definitely give them a shot. I think it's a very powerful tool. So make sure that you're reaching out to DJ over with National Flood Experts. Yeah, lots of great bits shared with on the show. Obviously, had a good book recommendation as well. It was one that I'm going to be checking out. I love hearing when people recommend things that I haven't heard, at least people recommend on the show before, executive ownership. So definitely be checking that one out. And obviously they have coverage across 40, or he's done improvements across 46 different states. So reach out, make sure that you're hitting them up with your potential properties and see what they can do for you on the flood insurance side. Guys, if you guys are interested in connecting with us here locally and you are in Hawaii or you're coming out for a visit, make sure that you're joining our monthly meetup, Honolulu Multifamily and More. It's a beautiful setting. It's an awesome opportunity to come out and connect with like-minded individuals, people who are either actively invested in multifamily properties, whether they be commercial, residential, or who are thinking about getting into multifamily. I don't think that you will find any better group on the island or in Hawaii for that matter, that meets every month, that provides you the level and quality of connections that you can make coming out to the meetup. We've heard that time and time again. So make sure that you're making plans to meet for the next meetups, which we have them every month. So connect with us through Facebook, find us on meetup.com. You can find us on Bigger Pockets. Would love to be able to come out and have you come out and make a connection, introduce you to some other people and obviously members of our team as well. And if you guys are finding value in the podcast and the type of content that we're bringing to you guys, please make sure that you're sharing the show. We'd love a 5-star review. We'd love some feedback from you as well. Again, always looking for ways that we can make the show better, how we can improve the quality of the content. So love that feedback and would love a 5-star review and a sharing of the content. So, but guys, thank you so much for tuning in today. That's going to be it for me today. We're going to be signing off. Go out, take some action, and we'll talk to you soon. Aloha.